Hello, friends. Welcome back. I am here with a new video. This video is on accounting concepts. Actually, accounting concepts are very important. These are the basic processes which we need to follow while preparing accounts or while drafting the financial statements. There are various accounting concepts where first and the foremost important accounting concept is going concern. Going according to going concern accounting concept, the accounts of an entity are prepared on the on going concern basis. That is, we assume that business will remain in existence forever. Why this assumption is taken? Since when we start a business, we do not have any intention to close that business very soon, and the values of assets, liabilities are uh, are taken accordingly. Uh, in case going concern assumption or in case going concern accounting concept is not followed, then the value of asset and liabilities will be taken in a different way. That is, assets will be valued on current market value, and if we are following going concern concept, assets shall be valued on the cost on which they were acquired. The second accounting concept is accrual concept. The books are prepared on accrual basis, which we have also discussed in our last video. As per accrual basis, the accrual system of accounting says that we need to recognize income which we have earned, although it does not matter that whether we have received that income in money or not. If we have earned that, the same need to be booked as income. And similarly, this concept is also applicable for the expenses. If we have incurred any expenses, then those expenses need to be booked in our books of accounts as expenses, instead of the fact that they have been paid in cash or not. The third accounting concept is money measurement concept. Each and every transaction of an entity is recorded in the books of accounts only if they can be measured in money. That is, all those transactions and events shall be recorded
Battery
in our
low.
books of accounts which are measurable in terms of money. If any transaction is not measurable in terms of money, the same shall not be recorded. For example, we have a very good manpower in our company, but that cannot be measured in terms of money, so that will not be recorded in our books of accounts. The fourth important accounting concept is business entity concept. According to business entity concept, a business entity is separate from its owners. That is, owner and business shall be treated separately. What is the implication of this accounting concept? The amount of the amount introduced by the proprietor, by the owners in the business, shall be treated separately as capital introduced by them, and the interest payable on it or any profit sharing payable on that will be treated separately in the books of accounts. That is, when the assets or liabilities are acquired by the business, those shall be in the name of business, instead of keeping them in the name of proprietor or the owners. The fifth accounting concept is accounting period concept. That is, books are prepared on periodical basis. Why it is important to prepare books on periodical basis? Because since if we do not break the period for preparation of books, and we go and we keep the business, we run the business forever, then we will not be able to know what amount of profit has been earned by us. So therefore we need to assess that whether we are in profit or in loss on quarterly, half yearly or annually basis. This is also required as per the Companies Act or as per the listing regulations given by SEBI. The sixth accounting concept is dual aspect concept. Dual aspect concept. When we record a transaction in the books of accounts, that is to be recorded on both side of the books of accounts. For example, if we purchase an asset and we have paid for that asset, so that will be recorded on both sides, means that it will have dual aspect. That is, if we have paid cash for it, cash shall be reduced from our books of accounts and asset shall be added to our books of accounts. Alternatively, we purchased an asset but on credit basis, then in that case asset shall be recorded on asset side and liability shall be recorded for the purchase of those asset on liability side. Dual aspect, that is, every transaction has a dual aspect. Seventh accounting concept is historical cost concept. That is, each and every transaction in the business is recorded on historical cost, that is the cost on which that transaction has taken place. Because we cannot overstate our books of accounts. For example, if we purchased a land today for rupees 1 lakh, we need to book that land in our books of accounts at rupees 1 lakh only. And until and unless we are going to sell that land, or the going concern assumption is being hit, we will keep the value of land in our books of accounts at rupees 1 lakh only. This is historical cost concept. And the eighth concept is revenue realization concept. According to revenue realization concept, every revenue, every service which we are giving, or goods we are selling to someone, the revenue should be recorded against those goods or services to make our service to make our business profitable. That is revenue realization concept. These eight accounting concepts, if these eight accounting concepts are very important for preparing books of accounts, since if we are following accounting concepts uh, religiously in preparing books of accounts, this will make our books of accounts credible. That is, if someone wants to rely on our books of accounts, then he or she will first see that whether the basic accounting concepts, or all the accounting concepts which need to be followed for preparation of books of accounts have been followed. If a business is following those accounting concepts, then
Battery low.
the person who is seeing our books of accounts will easily rely on our books of accounts. Our books of accounts will be credible, our books of accounts will be comparable with other person, with other businesses in the industry. Our books of accounts will be uh, helpful, will be proved helpful for making for any decision to be taken by the management. So it is very important to follow all the accounting concepts, all the important accounting concepts, so that the books prepared by us are very much reliable by any third party, or by the management who is using those books of accounts for the purpose of decision making regarding investment to be done by the third party, or by the management for business expansion or anything. Thank you very much.